just let's just take Colorado since, since
Yeah,
we're local here. What is happening in the Colorado market? How have you seen that evolve over the last few years? Because you mentioned like pension and, the state pension, there's always discussion about that. It has been for the last decade, but I feel like there's a lot of great things that are being offered out there in Colorado. So maybe talk to just the local market
sure.
for 3 minutes.
Yeah, and born and raised Colorado resident. So this was really, I mean, it's one of the things that really attracted me to SBH and doing this job is it was this beautiful um, connection of being able to do what I love to do, which is munis, but be able to do it locally too, which is just, it's a blast, right? I've had people say it sounds like a dream job because I get to be involved in political decisions, finance decisions, at the local and state level, and which is just a blast. And then you get to go use that rec center that you funded, right? Or your coworkers' kids goes to that school, and it's an awesome, um, it's really cool. I think investing has gotten it's gotten really efficient, which is fantastic, but it's also gotten very arm's length, I think, right? And munis are still one of those last markets that you can literally say, hey, if you own the Colorado fund, you helped build, some of your dollars went to build that road you're driving on, right? Which is just it's a cool thing. So the Colorado muni market is a fascinating one. And it's fascinating for a couple of reasons. Um, the biggest reason is that we have one of the strongest demographic credit stories going on in the entire municipal market. So across the country, right? Colorado bonds are very in demand, and they're very in demand for good reason, right? We're growing very quickly. If the most important demographic you can look for in municipals is college educated 22 to 35-year-olds moving there. And what portion of the population base is that 22 to 35-year-olds? Because those people go, they start businesses, they buy houses, they send their kids to school, and the tax base just expands, right? And so Colorado is one of those states that's certainly at the top tier for that. Denver is one of the cities that's right at the top for that. And that's a place people want to move to, right? And so it's a really attractive place to live, which ultimately is, at the end of the day, incredibly important, right? And you get smart people here and they're starting businesses that are growing. It's fantastic. Now, the flip side of that is that you have this fantastic credit story going on, and then you have one of the most broken tax codes that exists for states out there. And that's really saying something because there's some odd tax codes out there. But Colorado has a couple laws in place that date back. You've probably heard of them if you live in Colorado, but the Tabor Amendment, and then its little brother, which doesn't get talked about as much, but is equally as important, which is the Gallagher Amendment. And basically, what those two things do is they do some really good things, and they do some things that have really stifled um, the credit, I would say, of the state overall. And so the Tabor Amendment limits taxes, it limits the ability to issue GO debt for the state, which has been fantastic. GO debt in a lot of cases has been used as just this black box where you issue a bunch of GO debt, general obligation debt of the state, and then that money goes in the general fund and it just kind of disappears, and so it's been fantastic in that regard. It's been fantastic in limiting fiscal spending. And I think during good times it works exceptionally well. So fiscal spending is really tied just to an inflation rate. But the times that it becomes an issue is during major downturns. So '08, and then I think what we're in right now. And the reason for that is it doesn't allow the state to basically build up significant cash reserves over this time. So during good periods, true financial flexibility is that during good periods, you're bringing in more revenue, you're spending some of that, but you're saving some of that too in a rainy day fund, right? And that's what really creates this flexibility, smoothing out those periods of growth and then decline. And what Colorado has is it's had exceptional growth, but there's rules in place that doesn't allow it basically to even retain significant amounts of money. And so it limits the financial flexibility of the state. So, we're seeing that right now. It's had a huge effect if we look back and we can kind of point to effects of it. It's had a huge effect on higher ed funding at the state level, Colorado, University of Colorado, CSU, all the other various universities. And it's had a big effect on K through 12 education, we continue to be at the lower 25% of state K through 12 education funding, which again is something you would never guess if I just said, Colorado, how do you think our schools are funded? They'd say, oh, fantastically, right? You've got this great growth rate, you're growing like crazy, building new schools, but it's been limited by these laws that are kind of in place. And so it's a really unique situation in Colorado. You have to obviously understand a lot of the nuances, but that being said, like I said, you don't have to buy just K through 12 bonds. We don't have to buy University of Colorado loans. And there's markets and plenty of issuers out there that are not tied to the public pensions, or they're not tied to, again, funding of schools. We certainly do buy schools and fund schools, but we're able to position the portfolio kind of around these, again, these nuances that are kind of out there in Colorado. So overall, I mean, as I look forward where we're at, it's going to be a tough ride. There's no two ways about it. We've lost significant revenue, significant tax revenue, corporate tax, income tax revenue. They already significantly cut higher ed funding across the state, which is really unfortunate. I think the ability to have good higher education institutions that are super affordable to kids in your state is a huge credit positive for your state as a whole long term. I love the fact that someone in La Plata County can go to University of Colorado for $5,000. That's not the case, and it's becoming worse and worse, right? But again, those are going to be issues for down the road. But the state has, and all the issuers in the muni space, what I've really said is, there's a lot of levers out there they can pull, right? They can cut expenses like they have. There's ways to increase funding. They're obviously drawing on reserves they have, and so I don't expect widespread defaults by any measure. I really don't even expect many or any defaults of any real general obligations. I'd be pretty shocked. They were likely in a very bad position coming into this to begin, which most credits were not, but some certainly were. Credits were obviously avoiding. But overall, I mean, the state's in a very healthy position. If I had to say beyond, not looking really short term, but very much long term, what I would say is I think what's happened, if anything, is going to only expedite what Colorado is already seeing, right? We're already getting really strong growth. People love living here. You can have a backyard, you can buy a house, you can drive up to the mountains. It's fantastic. I think what's happened is people in major cities, really expensive areas, being trapped in your apartment for 3-4 months in a major city is horrific, right? I mean, it's no fun for anyone. And I think what's going to happen is people are going to put a lot heavier weight on the ability to have some space and be able to go outdoors and do outdoor things. So if anything, I think this is going to be ultimately a positive for Colorado. If anything, I think our growth is probably even going to pick up from here once we get through this short term. So